Are you interested in learning about investing but don't know where to start? Tired of working hard for your money but feeling like your money doesn't work hard for you? Well, welcome to the Apogee Wealth Podcast. I'm your host, Jonathan Nichols. Each week on this podcast, we break down the mindset, principles, and strategies that you can use to grow your wealth and live the life that you feel you were called to live. I hope you get a tremendous amount of benefit from this episode. Thanks for tuning in. Hey everyone, welcome back to another episode of the Apogee Wealth Podcast. Now, today's episode is going to be for a very specific niche audience. So, as you know, on this show, we talk about all things investing and wealth building, and really anyone who wants to grow their wealth, who wants to invest, can benefit from the content that we produce. However, today's episode is specifically focused on our niche, which is multifamily investing, and more specifically on people who are not currently but want to become active investors in multifamily real estate. So you may own some single family properties, perhaps you don't own any real estate, but you just have an interest in starting out in large commercial multifamily properties, but you don't know where to get started. Well, today's episode is for you. And in the few short minutes that we spend together today, I'm just going to outline some of the pitfalls that I see in the world of multifamily investing, specifically for people wanting to get started as an active general partner on deals. Now, perhaps you're in the audience and you're like, I don't even know what a general partner is or a multifamily syndication. Let me just give you a brief couple of explanation on terms. So, multifamily syndication, as a reminder, is where we have two buckets of ownership within a large commercial real estate property. So think of like 100+ unit apartment complex. And these two buckets are the limited partners or LPs. These are the people who simply bring the capital to the deal, right? So they invest in the deal. They have no responsibility. They have no liability, hence the name limited liability partner. But instead, they give their funds to someone else to basically invest in this project for them and have no control on it going forward. Now, this is a great opportunity, as you know, for people who are hardworking professionals. They make a good income. They want exposure to real estate and real estate investing, but they don't necessarily have the time, desire, and experience to do that themselves. And we've talked about this on the podcast before. Certainly, if that describes you, reach out to us. We'd love to have a conversation about the types of projects we do. But today's podcast episode is focused on the other bucket of investors, and those are the general partners. Now, the general partners are basically the ones who do what you would think of as the sweat equity type of activities on a project, right? So this would include finding the deal, getting the deal under contract, securing debt for the deal, and then running the deal after closing and seeing the business plan through to fruition. And the advantage of being a general partner is that there's extra economies or ownership shares that are assigned for these responsibilities, right? And so if you're someone who's able and willing to go out and do these things, you can simply earn way more on a project than simply just investing your money in it. However, the first myth that I want to, debunk right off the bat is that many people believe being a general partner is also a very passive activity, or that it doesn't take a lot of hands-on work to be a general partner on a deal. This is simply not the case. Being a general partner is in fact a very active activity, and although different roles as a general partner on a multifamily syndication team have varying levels of involvement, they all require active participation, active risk that you need to consider before jumping in. That said, if you're listening to this today, and you want to become a general partner, I want to give you just a few different tips that might help you on your journey to being a general partner on your first deal. And I think that in order to understand these tips, we first need to understand all the different roles and responsibilities of general partners on a multifamily syndication. So in my mind, there's three main roles as a general partner. There's the acquisitions role, which is going out, finding the deal, getting it under contract and getting it to closing. This requires a number of different skill sets. Obviously, analysis ability, or the ability to underwrite deals and understand what's a good deal, is one key ingredient. Another thing is having broker relationships and the ability to go out in a market, look at deals, tour deals, visit with brokers, and find deals that might be of interest for first analyzing and then putting offers on. Being able to secure the debt, understanding the capital markets, and being able to secure debt that's appropriate for your project. Another important skill set for an active general partner. Putting down risk money, which includes the earnest money deposit, typically 1% of the purchase price, plus other risk money such as legal fees, lender application fee, etc. Another valuable aspect to the acquisitions cycle or role within a general partnership team. And so those kinds of things make up the acquisition role in general. On the secondary role, there is capital raise, right? Going out and finding investors who want to participate in your deal. Now, most general partnership teams, including Apogee, will invest in deals themselves as a general partnership team. And we've invested as little as 5% on deals all the way up to like 40 to 50% on deals. But most of the time, we're investing around 10% of the total equity required for a deal, right? So that means the other 90% of the funds needed for the project, we have to go out and find investors and bring them to our deal. And usually on most general partnership teams, everyone is involved with the capital raise and everyone has some other kind of responsibility on the general partnership team aside from capital raising, even if it's smaller or more minute in nature, right? And this is to be in compliance with SEC rules, which says that you're not supposed to just raise capital for a team. You need to be an active investor. And so that might mean putting risk money on the deal, helping out with some of the acquisition stuff, some of the asset management stuff, signing on the loan. There's a number of different ways to be active on a deal aside from raising capital. That said, raising capital is the second big bucket or main role on a team because these projects are very capital intensive, and raising capital is one of the more difficult things to do on the project, right up there with the acquisitions and finding deals. And so raising capital is the second role. The final role is asset management, which is simply operating the deal after closing and ensuring success of the business plan for your investors. Now, obviously, people who are very operations oriented, have maybe had former project management type roles would generally be good fits for this. I will say as a potential new general partner, it's very rare to get shares on a multifamily deal for being an asset manager because it's a lot of trust me, I can do this up front when you're assigning shares on a deal without actually having done it before, right? Whereas if you're bringing a deal to a team or you're bringing capital to a team up front, you're providing value from day one, and that's a lot easier sell to an experienced general partnership team to let you in. So that in mind, there's a couple paths, if you will, to becoming a general partner on your first multifamily deal with these few roles in mind. And I want to just mention some of the ways I see people be successful. So number one is that, people will just go out and gradually step up the size of properties they pursue from an already present investment portfolio. So here's what I mean by that. Say you're someone and you already own, 3, 5, 7, 10 single family units. Well, it's not a huge step to go out and buy a 5+ unit property when you already have a portfolio like that, right? Whether you use your own money or you have a couple partners on the deal, it's just not a huge step up. And many people find success starting out in this route, right? If you already own a handful of single family properties, you probably have some equity, you probably have some more income to invest. And certainly if you partner with a couple other people that are in a similar position, it's not unreasonable to go out and buy an 8-unit or 16-unit deal and begin to learn the basics of multifamily investing, like acquisitions, underwriting, running the property afterwards, and working with a professional property manager to see your business plan through to success, right? So that's one way I see people doing it. And usually what that looks like is, they'll go buy maybe an 8-unit, and then they'll go buy a 20-unit, and then a 40-unit, then an 80-unit. And, many years down the road, they'll be at the 100-unit plus position as a multifamily investor. The challenge with this is it's a very slow way to scale, particularly if you're not using the syndication model where you're bringing investors in to purchase these properties. It takes a lot of time to build up equity at each of those stages and then be ready to move on to the next stage for your investing journey. And it's for this reason that the syndication model, when done correctly, is such a powerful way for both yourselves and the limited partners to invest in multifamily together. So if you want to start out in the syndication route, or maybe you own a small multifamily but now want to go the syndication route, there's really two main ways to get in deals. I hope you're enjoying the content of this episode. I want to take a quick 15-second break to thank our sponsor for this episode, which is Apogee Capital. Now, Apogee Capital is our private equity firm that we allow investors to participate in large-scale multifamily investment opportunities through. If you're interested in being a passive investor and would like to learn more, you can find information on our website, www.apogee.com. Link is in the show notes. Now, thanks and enjoy the rest of the episode. One is go out and be the acquisitions person, get in your market, look for a deal. Maybe it's a 40 or an 80 unit, but you're going to find the deal yourself, bring on a couple other general partners, raise the funds for the deal, and off you go. This is one way that I see people get into deals. It's not the most common because it can have a very high barrier to entry, right? When you're newer to multifamily investing, it's tough to find deals and know what a good deal is or where to look for it, how to underwrite it, analyze it, and certainly to solicit other general partners and then limited partners to come join you on your first deal. And it's for this reason that I see people more often than not getting their first one or two deals done by being a co-GP with an experienced multifamily sponsor. And so what this looks like is finding someone who's done a number of multifamily deals that you get to know, like, and trust, and then telling them, I will bring value to your deal in XYZ ways. Now, usually the number one way you can bring value to a deal, if you want to get on one, is raising capital for the deal. As I mentioned, that's not the only thing that you can do on a deal because you need to be involved in some other ways, even if they're smaller. But that is the number one way you're going to convince an experienced sponsor to let you on the deal, is the ability to raise capital for the deal. And so if you are just getting started, understanding the industry and then how to go and explain that to potential limited partners and start building a pool of potential investors that you could bring to said experienced sponsors is a great first step in getting started in multifamily investing. And so I can tell you, for Paula and I, we co-GP'd on our first multifamily deal where we brought investors. We signed on the loan, which happened to be a recourse loan, meaning there was more risk for us signing on it. We put in a good portion of the earnest money deposit for the property. We helped do the due diligence on the property. And then, of course, as I already mentioned, we raised a significant amount of funds for this first project. After we closed that project, we stepped down and did a smaller deal on our own with a few partners that we found and were lead sponsors on, and then went and did a bigger deal, and then a bigger deal, and on and on and on. And so oftentimes getting involved in multifamily is somewhat of a stepping stone process, but people are just unclear what those first one or two steps are in order to get involved. And the ability to raise capital, I would say, and then get involved actively with an experienced sponsor, probably the easiest way, followed by going out and finding your own deal and convincing people to join you, followed by simply scaling on your own or with a couple buddies from few units up to a lot of units over time. Now, perhaps you're listening to this and this is interesting to you and you're like, wow, I'd really like to learn more or get involved, and I just don't know how to do that. Well, I can definitely understand where you're coming from because we were actually in the same boat when we first got started in multifamily investing. So as you probably know from our story, Paula and I started out in single family in around 2017, 2018 timeframe. And over the first few years of our investing career, bought a number of single family properties that we use for short-term rental until we decided one day we want to be full-time investors. Like, we want to make a business out of this. And that's really the reason we wanted to jump from single family to multifamily, is the economies of scale in multifamily are much easier to get started as a full-time investor, meaning these properties make enough money to where being a full-time investor actually makes sense. And I would say for us, it better fit our professional skill sets. So my background was working as an aerospace engineer. Paul's was working as a management consultant. And putting those two skill sets together, we were much more equipped to go find large deals, analyze them, have professional conversations with brokers, investors, understand all the mechanics and put the deal together, as opposed to, say, managing properties, renovating properties, and doing more of those types of things that we are not particularly good or experienced at. And so those are some of the reasons we wanted to go into multifamily investing from single family. Now, the challenge for us was all the things that I mentioned. It's a very high barrier to entry investment class. And so getting started can be extremely difficult if you don't know what you're doing. So ultimately, we went and joined a mentorship program, went through said mentorship program, and that was really the stepping stone that got us towards that first deal, second deal, and gave us the confidence that we needed to begin working in multifamily syndications. Now, for those of you that know me well, I then went into work as a coach in a large multifamily coaching program, the same one we went through for almost 4 years, and have worked with literally dozens of students to help them find their first multifamily deals and break into this industry. And as of a couple months ago, we at Apogee Capital have launched what we call the Apogee Advisory, which is basically like our consulting branch of Apogee Capital. And we would be able to help new investors through this branch to get involved in multifamily investing. And so if you're listening to this and you either are brand new to multifamily investing as a general partner and want a one-on-one person to help you and guide you through getting your first deal as a multifamily investor, being a general partner, feel free to reach out. We have a lot of experience helping, like I said, literally dozens of people through this process, and now we're making that an arm of our company, Apogee Capital, and sub-branding that as Apogee Advisory. So if you're new to multifamily investing, you want someone to hold your hand, explain all this, and help you learn and grow so you can become a general partner, reach out to us. Now, perhaps you're listening to this and you've already done a couple of multifamily deals and you have some experience, you know how to underwrite, but you're just stuck in the ability to scale your multifamily portfolio. Well, if that fits you, we actually have a second offering through our Apogee Advisory consulting arm, and that is our mastermind. And the mastermind is a small group of experienced investors like myself who are looking to grow and scale together. And so one of the challenges in this industry is sometimes you get in and you have questions, but you just don't know who to ask. Like, how do I find more deals? How do I raise more capital? I'm having problems managing the deal I currently have. How do I make it run better? Those kinds of questions can be very difficult to go out and find people to ask. And so the purpose of the multifamily mastermind is simply to bring investors together who are already active in multifamily investing and allow them to collaborate and therefore learn from each other and scale our businesses together. Okay. And so if you're someone who you already own a couple of properties and you want to be, around like-minded people who can help you grow in your business, once again, reach out to me and would love to have a conversation with you about our mastermind. Now, back to kind of the rest of the tips or the content that I want to leave with you for today. As a reminder, being a general partner on a deal is a very active, involved role. I think that one of the big myths that's spread in the industry is that it's simply a set it and forget it deal. You find a deal, you put it under contract, raise the money, and give it to a property manager, and you don't have to do anything. But what I would remind you of is that, once again, apartment investing is a business. When you close a deal, you actually have a literal business to run. And although you have a property manager to help run the day-to-day tasks, you still have to oversee that property manager, the direction of the project, and the management of the business plan to make sure that ultimately that project is successful for the investors. Obviously, that's a lot of responsibility with a lot of funds at stake. And that's the reason why I think it's so important people getting in this business understand the gravity of it if you want to be a general partner on a deal. Now, maybe you listen to all this and you're like, I have no desire to be active on a deal. I don't want the stress. I don't want to sign on loans. I don't want to put earnest money down or raise capital from people. Well, then that's where being a limited partner is probably a better choice for you. And so, as I mentioned early on in the show, many hardworking professionals who have good incomes, they don't have the time, desire, or experience to go out and do real estate themselves. And that's where the limited partner ownership role in syndications can be really beneficial for those people because it allows you to have exposure to real estate and the benefits offered by active ownership of real estate, including the tax benefits, in order to grow your wealth, right? And at the same time, you have, hopefully, if you choose a good sponsorship team, full-time professionals that are running that deal and can likely do a lot better job than you would at running it. Just like when you get on an airplane to fly, you trust the pilot to go pilot the aircraft because that's their full-time profession and what they know how to do. So hopefully this episode today has been useful. Once again, I know a lot of people are interested in becoming general partners on a deal, but just don't know how to get started. If that's you and you're interested in our Apogee Advisory offerings, feel free to reach out. Would love to have a conversation with you about it. And in the meantime, appreciate you listening to the podcast, and we'll see you on next week's episode. Thanks for tuning into the Apogee Wealth Podcast. I certainly hope you found something valuable in this episode that you can take with you and apply to your own investing journey. If you found the show valuable, you can subscribe so you don't miss further episodes. And if you'd like to learn more about ourselves or our company, you can visit our website, www.apogeemfc.com. We have a ton of educational resources that I'm sure you'll find quite valuable. Until next time, happy investing.